It's been anything but benign in EM. This is year to date, we've seen defaults, corporate defaults rise to almost 11.5%. That's 3 times higher than what expectations were entering this year. That's been a real headwind for the asset class. Now, the China property sector, the Russia-Ukraine crisis, those companies in both of those areas combined accounted for roughly 90% of those defaults. So if we stripped that out, that default rate would have only been about 1.2%. Now, the reason that this double-digit default rate is so hindering to the asset class is we haven't seen defaults rise to double digits since the global financial crisis. The 15-year default average has been roughly 4.3%. So this is a real issue for this area of the globe. Now that's only on the EM corporate side. On the EM sovereign side, I really don't think anyone can pick up a newspaper without seeing another country looking to restructure or going to one of the multilaterals for aid. But when you think about the EM external sovereign index, the MB index, you have roughly 72 countries. 15 to 17% of those are pricing default or stressed levels at spreads of 1,000 or more currently. And a lot of those countries are really, smaller countries. You're seeing it in Lebanon, Sri Lanka, Venezuela, Zambia. There is no solution for those areas of the world until we see that rate stabilization and we see the dollar come off of this extreme bull run that we've seen taking place over multi-decades. But it's worth citing that the outlook for defaults is not the same for next year. With the headlines and the headwinds of potential rate stabilization, political tensions between Russia and Ukraine behind us, and the Chinese central bank more active in their loosening measures, we believe that there's more opportunity to see that default rate fall back towards average.